The accounting cycle steps. 1. Record journal from an event. 2. Posting to ledgers. 3. Trial balance. 4. Adjustments. 5. Adjusted trial balance. 6. Preparing income statement. 7. Closing entries. 8. Statement of retained earning. 9. Post-closing trial balance. 10. Other statements preparation. 1. Record a journal. The first transaction, Company C made a deal to sell shares to investors. It initially issued 1,000 common stock shares of $100 par value for $100,000. Accountants should debit cash for $100,000, credit common stock for the amount received. The second transaction is about purchasing prepaid rent. Company C paid $4,200 to purchase prepaid rent for 1 year. Company C should record this transaction by debiting prepaid rent and crediting account payable for $4,200. The third transaction, Company C purchased equipment for $24,000 on account. To record this transaction, debit equipment for $24,000 and credit account payable for $24,000. The fourth transaction, Company C purchased 400 units of inventory at $100 on account. An entry is made to debit inventory for $40,000 and credit account payable for $40,000. Two. Posting to ledgers. The first transaction affects two ledger accounts, cash and common stock. Company posted $100,000 in account number 101 and $100,000 in account number 808. The second transaction affects two ledger accounts, prepaid rent and account payable. Company posted $4,200 in account number 110 and $4,200 in account number 680. The third transaction affects two ledger accounts, equipment and account payable. Company posted $24,000 in account number 210 and $24,000 in account number 680. The fourth transaction affects two ledger accounts, inventory and account payable. Company posted $40,000 in account number 120 and $40,000 in account number 680. Three. Trial balance. Trial balance is created from ledger accounts. 1. $100,000 of cash in account number 101 is transferred to a trial balance. Two. $100,000 of common stock in account number 808 is transferred to the trial balance. Three. $4,200 of prepaid rent in account number 110 is transferred to the trial balance. 4. $68,200 of account payable in account number 680 is transferred to the trial balance. Five. $24,000 of equipment in account number 210 is transferred to the trial balance. Six. $40,000 of inventory in account number 120 is transferred to the trial balance. Total debit side equals total credit side. Four. Adjustments. The first adjusting transaction, Company C sells goods to a customer for $42,000. The cost of goods is $20,000. Account receivable of $42,000 should be debited and the revenue credited for $42,000. This transaction always comes with sales transaction. Company C sells goods to a customer for $42,000. The cost of goods is $20,000. Reduction in inventory is recorded by debiting cost of goods sold and crediting inventory for $20,000. The second adjusting transaction, salaries and wages of $3,000 earned by employees but not paid. The correct accounting entry would be a debit salaries and wages expenses for the amount to be paid, with a matching credit to salaries and wages payable. The third adjusting transaction, the accounting transaction for the income tax expense of $2,000. An accounting entry is made to debit income tax expense for $2,000 and credit income tax payable for $2,000. The fourth adjusting transaction, prepaid rent expired during the year for 1 month. This transaction should be completed by recording $350 to rent expense as a debit and credit prepaid rent for the same amount. The fifth adjusting transaction, equipment with fair value of $24,000 and estimated life of the asset is 4 years. Company C uses straight-line method to record depreciation expense of equipment for 1 month. The accountant would debit depreciation expense for $500 and credit accumulated depreciation for $500. Adjusting entries posting to ledgers. The first adjusting transaction affects 2 ledger accounts, account receivable and sales revenue. Company posted $42,000 in account number $242,000 in account number 1000. The second transaction affects 2 ledger accounts, cost of goods sold and inventory. It posted $20,000 in account number 1100. On the other hand, the company posted a reduction of $20,000 in account number 120. The third adjusting transaction affects 2 ledger accounts, salaries and wages expense and salaries and wages payable. Company posted $3,000 in account number 1200 and $3,000 in account number 720. The fourth adjusting transaction affects 2 ledger accounts, income tax expense and income tax payable. Company posted $2,000 in account number 1250 and $2,000 in account number 785. The fifth adjusting transaction affects two ledger accounts: rent expense and prepaid rent. Company posted $350 in account number 1160. On the other hand, Company C posted a reduction of $350 in account number 110. The sixth adjusting transaction affects two ledger accounts: depreciation expense and accumulated depreciation. Company posted $500 in account number 1150 and $500 in account number 220.